Hello guys, what's up? Welcome back again to MJ Crypto, and this is BTCDOM USDT. This is the dominance of Bitcoin, and I'm going to be analyzing this asset right here on TradingView. If you are new to this channel, kindly click on the subscribe button right now so you don't get left behind. All right, I drop amazing content like this every single week. Sometimes I drop as much as 5 videos a week, 6 videos a week, as the spirit leads. All right, this is MJ Crypto, and you're welcome. Now, BTCDOM, we already know we do our top-down analysis from the weekly time frame. Now, if you do not know what top-down analysis is, it means analyzing an asset from the higher time frame down to the lower time frame. So we start from the weekly, and then we tend to figure out what exactly it is we're doing. Now, you can see vividly that we have something like an ascending triangle from the weekly time frame. Now let's go back, or rather down to the 3 days time frame. Let's see what it looks like over there. Let's see what we're having from the 3 days time frame. We have exactly the same picture painted right in front of us, but right here I'm talking about the external picture. You can see the external picture is looking kind of bullish because price is consecutively making higher highs from this point. Now let me show you what I'm saying. You can see I'm making higher highs and higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, like that, right? Until here where we had our change of what character, had our change of character somewhere around here. Price came here again, and then to fill up this particular supply zone. So we can say that in the immediate term we're actually bearish. All right, the weekly is saying that, oh, we are bullish, but the 3 days time frame is saying we're bearish. So what do you think we should go with? Let's go back again to the weekly time frame, and let's see what exactly it is that is telling us. Now, mind you, from the weekly time frame we did not have a value change of character. Do you know why? Because from here we did not break structure. Liquidity was only taken out. We did not break structure from the weekly time frame. All right, now until this zone here, this point here is taken out completely. I mean this axis here, let me just illustrate what I'm saying so that you get it clearly. Until this point here is taken out completely, we do not have a bearish bias. We're still bullish on the weekly. Now let me take this off and go back to the 3 days time frame so that you see clearly what exactly we are saying. 3 days time frame is telling us that, oh, we're already bearish, and as a matter of fact, right from this point here we have a bearish bias, because it is already looking like a change of character has occurred right here, and price is just going back to fill supply zones and take out liquidity and return back to its direction, which is the downside, right? Good. So let me just plot this out, what exactly it's saying. If you've not gotten the SMC Made Easy course, I don't know what you're waiting for. I really don't know. Try as much as possible to get it. The link is in the description of this video. Send a DM so you get the course for yourself. It's going to help you project towards more profitable trades, right? Good. So right from here we have our change of character already. Character has already changed. You can see, let me just make this very visible for you. I have a change of character here, and then boom, price came back again to fill up the supply zone. All right, price came up to fill up the supply zone, then it came back again. This is the 3 days time frame, right? Good. It's showing us that we're actually what? Bearish. So in other words, the external overall trend is still bullish because we haven't broken structure from the weekly, but the 3 days time frame is showing us that we're bearish. What is the daily time frame showing us? Let's see. This will tell us the current trend. Just pay attention, okay? Pay detailed what? Attention. Amazing. Do you see? We're actually what? Bearish on the 3 days what time frame. Yippee, we're bearish now. So I'm gonna have to put my supply zone right here. This was my supply, the last bullish candle that caused the wave to the downside. This is it. This is the other block, and this was where price retraced from. And put this in red color so that you see it clearly. What we're doing now is clearly SMC what? This is clearly smart money concept driven. Okay, now we have our bias here on the daily time frame, and it's telling us that we're actually bearish because we had a change of character and price has actually reacted from here, isn't it? Now good. So I'm going to go down to the 4-hour time frame. I love the 4-hour time frame a lot because it shows you what the market is doing at the moment, like right now. You can see right here we have something like a wedge pattern forming. Let me just zoom in so that you see clearly. Make this bold enough. You can see that we have a falling wedge. Do you agree? Meaning price wants to retrace back to. See, if you draw this trend line connecting everything, you're going to see clearly we have a falling wedge pattern. Good. And then if you connect all the dots, all the lines, you're going to see that we have a falling wedge already what staring at us in the face. All right, and not just that, let me make this sticker. SMC made easy. Go and get the course, guys. To get the course, the link is in the description of this video. Send a DM and you get it for as low as $29. You can analyze any coin, any asset, stocks, forex, crypto, anything at all that has to do with technical analysis. You can analyze it on your own and get your signals. You can even have your own signal group when you get the course. All right, it's that easy. Now you can see right here we've broken out. We had a breakout from this falling wedge, and what does that actually tell us? It's telling us right now that as it stands at this point in time, all right, at this point in time, our breakout has occurred and we had a change of character to confirm this breakout. It was somewhere around here. Good, which was somewhere around here. Let me make this lighter. And you can call this CHOCH. Let me just call this, put this in blue color. And then, yeah, you can call this our chalk. You can call this, and we can say, yes, this is actually the demand zone that caused this chalk. Now we can put it right here. This will now be our other block. So the price gets back to that zone. It's a confluence because the other block is forming right at the resistance of the falling wedge. So I'm going to put this in blue, illustrating that yes, it is actually a demand zone. So when price gets there, it's going to retrace downwards, come back, fill up, take out liquidity if possible, and then boom, from here, boom, to the upside. And we're going to fill up we're going to fill up. This was actually from the week, from the daily. Let me take this out. So we're going to fill up some gaps, and guess where we're actually going to fill up the gap from? Somewhere around here, guys. It's going to be somewhere around this axis, because you can see clearly that this was what? A break of structure. A break of structure happened here. Just show you. You can see a break of structure happened right here. So I'll call this BOS. I'll put this in red color. Yeah, so boom. You can see break of structure, and then we have an order block somewhere around here that has not been mitigated. This order block has not been what? Mitigated. There's one here. All right, good. This other block has not been what? Mitigated. So we should be targeting somewhere around there. All right, don't forget we also have a break of structure, but basically that other block has not been mitigated. It is left unmitigated, so we should be targeting there as our what? Target zone, somewhere around here. Target zone from the 4-hour time frame. All right, if this plays out as anticipated, this is a huge win for you, because you're going to be getting a lot of profit from this trade. Now, in basic terms, what I've just done is to show you that top-down analysis is one of the most interesting things that would favor you in the long term. Now, do you know why? It's very clear and it's very simple. Do you know why? I just said something. I said it's very clear and it's very what? Simple. Now, when we hit this target here, remember this is just a short-term retracement. When we come here to take out liquidity from here, remember all of these areas, all of these trend lines, they are all liquidity. Liquidity is resting around all these places. Trust me, liquidity is resting above this trend line. So when we take out all the liquidity, we're going to come down again. Most likely we're going to come down to take out this week low. Remember, we're already bearish, okay, from the 1-day time frame. We're going to take out this week low. Now, where's the week low? Somewhere around here. This is what our week low. I'm going to come down and take out this week low. It is weak because we couldn't break the strong high, which was the swing high. We couldn't break it, so it becomes a weak low. So here would now be our next target. When we are coming down, here will most likely be our next target, and this will leave us around with 1538. This should be around, let me just measure it so that you can see what exactly we're doing. You know that, yeah, this is real life, bro. This is real life. This is real life. You can see we have about almost 8%, almost 8% increase. Now, if you are leveraging on 25x, you already know what that means. If you are leveraging on 25x leverage or even 20x leverage. All right, so basically, yeah, this is just one of those things that you need to put into consideration, and you need to understand very well. So yeah, yes, you can go in. This is a valid setup. I've just showed you from the weekly to the daily and to the 4-hour time frame. I even added the 3 days time frame which I usually do not add, but I just added it as an additional confluence. All right, a confluence is where two or more signals coexist together. It gives you extra validity for the setup. All right, so basically that's what it is. So now, yeah, so you can get the SMC Made Easy course. Get it for yourself, guys. This will help you. It's $29. The link is in the description of this video. Send the DM. Get the course for yourself. You need it. Everyone needs that course. All right, it's actually so important for you as a trader. All right, cheers, guys. One love. Big ups. Do ensure you keep trading, being profitable, and don't forget, use a good risk to reward when you are trading. Don't be greedy. Have a plan, and trust me, you're gonna make consistent profit, guys. Consistent profit. Gonna make consistent profit. Yeah, peace out. Love you.